Lessons from the Federal Reserve's problems. The US president has stepped up pressure on the Federal Reserve, insisting that there was virtually no inflation and it was time for preemptive cuts. The last reading of the Federal Reserve's preferred inflation gauge remains above the central bank's target, and there will be a new readout next week, Bloomberg reported. These comments raise new questions of whether the Fed can maintain its long-standing independence, with the president increasingly expressing his dissatisfaction that the central bank hasn't moved to lower interest rates, said Bloomberg. It also quoted analysts saying that there is virtual unanimity amongst economists that monetary independence from political interference, that the Fed or any central bank be able to do the job that it needs to do, is really important. Meanwhile, there have been several fallouts because of this war, though that's not the only reason. The Bloomberg Dollar Spot Index fell about 0.7% on Monday, and all Group of 10 currencies gained against the dollar, said Bloomberg. And the Nikkei also was down, but the jump in the yen weighed on stock indices in Japan. In a sign that investors are rotating investments away from the US, Deutsche Bank said that Chinese clients have reduced some of their treasury holdings in favor of European debt, according to Bloomberg, and who also quoted a bank analyst saying that European high-quality bonds, Japanese government bonds, and gold are likely to be the potential choices for investors as alternatives to treasuries. With Trump raising the pressure on the Federal Reserve to cut interest rates and also sack the governor, this is a useful moment to pause and ask, why is the independence of the central bank important and perceived to be important? Why is it that investors are turning nervous even as Trump steps up that pressure? And what can we here take away from that event or the set of events? To discuss this, I'm joined by Ashok K. Bhattacharya, Editorial Director and columnist at Business Standard. And I began by asking him the very straight question, what is the lesson for India?
The power of the executive on appointing and sacking monetary policy authority, CEO of that organization. I think the US system is probably far more refined, and his system takes care of these risks of executive overreach. So, as you would have seen, that Powell was nominated by the president, Mr. Trump, in 2018, but his appointment has to be endorsed by the Congress. So, he is not the executive appointment. So, in a sense, the regulator's appointment cannot just be responsibility, and the authority of appointing the regulator should not just rest with the executive. Now, something similar is here in India. It's like when you want to appoint a CVC, you have to have a committee in which there has to be the Chief Vigilance Commissioner has to be appointed by a committee of 3 members. Two from the executive and 1 from the opposition. Now, it's a different matter that if there had been a 4th member, maybe he could have been from the judiciary, the independence of appointing a regulator like the Chief Vigilance Commissioner would have been more secure, I would say, independence. But in the case of, let's say, take India's RBI. Now, India's RBI is appointed solely by the executive. And this is not something that has happened now. This is an old tradition. As early as Jawaharlal Nehru his government has fought a battle with the RBI governor and actually made it known to him that he is part of the government. So therefore, the big lesson that I would draw from what is happening in the US is, whatever Mr. Trump may be saying, but his power to get rid of him before his term ends is severely limited. He can rant about it, but he cannot really sack him in that sense. In India, if the executive does not like regulator or the RBI governor, the RBI governor will be, in a sense, obliged to quit, or he may even be sacked. There is a provision under the RBI Act under which the government can actually raise issues and terminate his service. So I think that's the lesson, that the guardrails that you have in the US system and the absence of those guardrails that you have in the system. Now, in India, there is another dimension to this debate, which is the elected leaders and unelected regulators. Now, there was this big debate some time back that how can an unelected regulator have preference and have a certain position that he enjoys, which is better than the elected regulator who is speaking on behalf of the people. So I think this debate needs to be really to take place in this country, and we must find a solution to this. I think the US model is a good model.
So now, if I were to look at the outcome of the tensions in the US now between the president and the Federal Reserve governor, the markets are worried and treasury yields are going up, which means money is going away from US treasuries, which means people are fundamentally losing trust in that system. What does that tell us? And why should the markets be worried if all of these arguments hold true, that the Federal Reserve governor or the governor of the central bank is really responding only to the larger needs of the country, which is the United States in this question?
Well, the markets are going down, are being jittery, and not just because of what Mr. Trump has said about Mr. Powell. I think the markets are showing signs of nervousness for a variety of factors. If you look at the IMF report, we will see that there are bigger reasons the markets are worried. Is because of the economic growth, because of the trade has going to take a severe knock. So therefore, markets are reflecting that concern. They are worried about what the president might do to Jeremy Powell, but I have a sense that he cannot, apart from making those comments, I don't know whether he can cut short. I'm reasonably certain that the law doesn't allow the president to issue an executive order to terminate him. And in any case, Mr. Powell's term comes to an end next year. 2026 is the 4-year term comes to an end. So I have a feeling that when that term ends, he will obviously the extension will not take place. And Mr. Trump will nominate another candidate, and that candidate will have to be vetted and passed by a congressional committee.
But to the extent that if there is tension in the air or around the central bank, it does send off signals of uncertainty to investors. I'm wondering if there is any lesson there. I mean, not that India's central bank is transmitting signals that are different or suggesting that things are not all right, going off on a completely different tangent from where the government's policies are going. But is there a lesson in this that the need to transmit the sense of independence is equally important going forward, even if at some point you were to be, let's say, shifted or moved as the central bank governor?
I couldn't agree with you more on this. I think this tension is necessary. The fiscal policy authority and the monetary policy authority, they cannot have a jugalbandi of sorts all the time. I mean, ultimately, both have to address the concerns of the economy, and they will do it their own way. In India, what we have seen in the past is that take the famous case of a finance minister who said that if the Reserve Bank of India governor does not cut interest rates, I will rather walk alone. Now, that was a statement, something I would say not similar, but showing clear sign of the difference of opinion between the finance ministry and the Reserve Bank of India. Now, I think that healthy tension, if it remains healthy, is fine to my mind. But I think if there is a sense in the market that the Reserve Bank of India governor exceeds the brief that the government has given him, he will lose his job. I think that will create tension and uncertainty in the market. For example, even the last governor, the Reserve Bank of India governor, was not really cutting interest rates, even though there were a lot of overtures, suggestions being made to the Reserve Bank that maybe it's time to cut interest rates. But he was using his own economic assessment to say that the time is not ripe, inflation as a beast has not yet been tamed. So I think that healthy tension is good for the economy, good for the markets. What is not good for the market is when there is uncertainty over the tenure of a regulator, in this case, the governor of a central bank, just because he differs with the fiscal policy authority or the government.
Right. Thank you so much for joining me.
Thank you. Thank you very much.